Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, registered investment advisors, family offices, and individuals like you to help you get better returns in the stock market. I am here with our host, Robb Fahrion. He's the CEO and founder of Flying V, our digital marketing partner. Robb, where in the world are you today?
Yeah, I feel like that's becoming a common question that leads into the five things. This week, Gary, I am in Tempe, Arizona, a little bit right outside of Phoenix, Scottsdale area. So yeah, I've been here since last Wednesday. Probably be here through next Monday, actually. So long trip in the desert. I thought it was a good place to be over the last couple weeks. You never know what was going to happen. So middle of the desert's where you want to be, right?
Yeah, that's a good place in case things are happening. Being somewhere quiet is good. So you were telling me before, I know you posted this on Instagram, you voted last week, did not have to show ID, and you could make up an address.
Yeah, I think so. I mean, I've had some people battling me back on it, right? But in theory, yeah, I mean, you walk in with a name and an address. We were right in Orange County, California, and yeah, no ID needed. I didn't even have to do the date of birth. Now, obviously, you're signing, right? With the signature there, but I was gonna try my brother's name. Didn't end up doing that because that's obviously illegal, and we don't do those types of things here.
Yeah.
But yeah, it was a very interesting process, but still did my civic duty as a citizen and voted in the state of California election. So good
What about
stuff.
the dog? Did the dog get a vote?
They asked if she would like to. She was a little shy. She hasn't really firmly planted her paws in the positions or the issues that she cares most about. So maybe the next time around in 4 years or so.
All right. In 4 years, Rob, we want to know if your dog is voting for Team Red or Team Blue. You let us know.
I will be sure to report back with any new updates. But Gary, wow, what a week! As of this shooting right now, it is, let's see, 317 on the West Coast, 617 for you, Gary. Bitcoin right now is trading at, I think, $89,000. We're gonna try and keep some tabs on it over the course of the next hour, see if we break through that 90,000 mark. But this week's five things: the president-elect Trump loves Bitcoin issue. It's been all the rage, as I'm sure you all have seen in the markets. Just a crazy week since the election about a week ago, last Tuesday. Today, Gary, we're talking Bitcoin, of course. Inflation, still need to keep eyes on that. You recently had a webinar with Enrique Abeyta talking Talen Energy. So we come in with some more reports there. And then we're talking about savings for Americans. And finally, we'll talk about investor education, talking a little bit about risk, different things we can talk about with hedging. We'll get into a lot in that fifth and final point. Gary, before we jump into it, lots going on. Anything to say just as a whole, with everything that's gone on over the last week? Obviously, we're in a much different position now than we were 7 days ago.
Rob, in a lot of ways we are, and certainly we're going to talk about Bitcoin. We're going to talk a little bit about some of the election issues. It was a resounding win for Team Red, and we'll talk about that a little bit. Um, but in some ways, nothing has changed. And what I mean by that, and this is, in the run up to the election, I don't know how many times we said we cannot vote our way out of this problem. The
Right.
biggest problem the United States has is an unsustainable amount of debt. We're talking more than $36 trillion of on balance sheet, more than $200 trillion off balance sheet. Total liabilities of this country are about $250 billion. It's really fun to say tax the rich, make them pay their fair share, which those words fair share have no defined meaning. It's just nebulous. Um, but there's no amount of money that we can tax those billionaires to get $250 billion. And so, we're either going to default or have a stealth default where we just print so much money to pay our bills that the money is worth nothing. Or we're going to have to completely revise our spending and social contract. There's nobody in office who's going to do that. And so, what we said in the run up is neither candidate, neither party is looking at cutting the size of the government. They're not looking at cutting spending. Yeah, Elon Musk has talked about cutting trillions of dollars of wasteful spending. I would love to see him do it, but I'll just point out that this is something that's been discussed for decades. President Reagan was supposed to be a conservative. He spent more than President Carter did. Vice President Al Gore was going to reinvent government. And in doing so, get rid of the waste and make things more efficient. I would have loved to have seen him do it, but nothing ever happened. And this is the direction these things go. Nobody ever cuts spending. It's very difficult to do politically. And so, I think in some ways things are very different, and half the country is thrilled and half the country is apoplectic. But nobody is going to deal with the most serious problem we have as a country, which is our excessive debt and excessive spending and very fragile fiat dollar. And no one's going to deal with it until they are forced to. And that is some, not all of what we're seeing in Bitcoin's price, which is up by my count, Rob, $1,500 since you and I got on this call 20 minutes ago. So, people are starting to realize that there may be some spending issues as well.
Yeah, about 43% over the past month and 31% over the past week. Great perspective, though, Gary. Always looking at things from every angle. Before we get into it, remember, please subscribe for a free subscription at deepknowledgeinvesting.com. We also have a premium subscription that will unlock all access to all paywalled content, as well as current portfolio recommendation by sell alerts coming from Gary and the team. Let's jump into it. Thing number one, Bitcoin predicts the Trump win. We're talking, Gary. Is the U.S. going to be more friendly to sound money? Thing number one, Bitcoin's crystal ball. Trump wins and crypto surges. Gary, take it away.
All right. So there's a lot going on here. First of all, a week ago, the day before the election, we had Bitcoin at $67,000. As we are talking about this right now, $89,500 or so. That is more than a 30% move in the week. So let's talk about the big winners from last Tuesday. Big winner, of course, President Trump, former President Trump and President-elect Trump. Right. He took the popular vote by millions of votes. He gained 312 electoral votes. That was a pretty big win. He swept the swing states. It looks like the Republicans are likely to have 53 seats in the Senate, which means the Democrats have handed over control of the upper house. And while we don't have a final tally in the House, every day it looks more and more likely that the Republicans are going to maintain a very small majority in the House of Representatives. So, really good week for the Republicans, but an even better week for Bitcoin. And, it's really important to note here, President Trump, when he was campaigning, he went to the Bitcoin conference. He went to Bitcoin meetings. He flat out told Bitcoiners he wanted their vote, he wanted their support, that he wanted to reduce regulatory burdens on Bitcoin and cryptocurrencies, and talked about establishing a United States Bitcoin reserve. And I have no idea if they're going to do it or not, but there are talks that the US government may be looking at buying 1 million Bitcoin. You think, okay, well, is that a lot? Does it matter? The maximum amount of Bitcoin that will ever be mined is 21 million. So if the US government buys 1 million of that, that is enormous, especially since it would be all incremental. At this point, about 95% of all Bitcoin that will ever be mined has already been mined. So huge, huge winner there. But it wasn't just President Trump. The Bitcoin community was very, very politically savvy and aggressive in identifying politicians that were both friendly and unfriendly to Bitcoin, and they absolutely brought their candidates into office. They campaigned very hard. They donated money. And the Bitcoin community, from what I've seen, it looked like they had a perfect record. The really anti-Bitcoin people were tossed out of office and replaced with pro-Bitcoin people. One other thing that I want to convey, because it's very, very important, is our polls, the regular election polling over the last 3 elections has been abysmal. It has been inaccurate. Some would say by design, some would say intentionally, some would say polling is hard. I don't know. But the point is, you really couldn't see what was happening looking at the polls. But what I was doing on Monday and Tuesday was I was watching the price of certain assets. And so it wasn't just the prediction markets. In the election prediction markets, by the way, they nailed it. Those prediction markets were completely accurate. But beyond that, I was watching the price of Bitcoin. It was very clear that Bitcoin was a referendum on the election. And you could see Bitcoin running up, into the election results. And then as we started to get positive results for former and now President-elect Trump, Bitcoin started to run, and it has done nothing but go up since then. You could also do things like track DJT. That is the ticker for President Trump's media company. That stock was up more than 10% in the aftermarket on Tuesday. We were tracking things like currencies, interest rates, basically financial markets and prediction markets all over the world were telling you this was going to be a big red win. And so, it was a huge win for the Bitcoin community and the crypto community. And because it wasn't just President Trump, because they moved so many antagonistic politicians out of office, I think we're going to see some potentially positive Bitcoin legislation in the first couple of years.
Gary, you talk about obviously President-elect Trump coming into office. We know Fed shakeup might not necessarily be a guarantee. You talked about any move towards sound money principles you're supportive of. If the administration does tend to move or look to move in this direction, what does that mean for Bitcoin and gold first? And then number two, I think Judy Shelton's name has been thrown around. So tell us more about her and what that means.
That's a great question, Rob. And let's start by talking about Judy Shelton. I'm a huge fan of hers. I think she's fantastic. Judy Shelton she was nominated for a position on the Federal Reserve during President Trump's first term, and she was not confirmed by the Senate. And I believe the reason for that is because Judy Shelton is an advocate for sound money, and she likes gold, and doesn't like the fact that the fiat dollar is really backed by nothing. And so, everybody at the Federal Reserve, almost everybody, they are soft money, print and spend, MMT, that stands for modern monetary theory, Keynesians. Basically, the people who are running the Fed now all believe we can print an unlimited amount of currency for any reason, and let's just run with it. Judy Shelton is in favor of more restrained spending and more care with how we treat the dollar. So, she unfortunately wasn't seated the last time around, but there are rumors, I don't know if they're true or not, that when Jerome Powell's term as Federal Reserve Chairman expires halfway through President Trump's second term, that he may nominate Judy Shelton to head up the Federal Reserve. If that would happen, that is a huge win for Bitcoin, a huge win for gold, a huge win for the United States. I would love to see somebody in favor of sound money in charge of the Federal Reserve here. The only thing that would be better would be to end the Fed, close the building, send everybody home, and let the market set the rate of interest, which is the price of risk and time. We're not going to get that, but we could get Judy Shelton. Big fan. Hope that happens. Separately from that, Rob, it's not just the U.S. government that's heading in that direction. We're seeing some great moves out of South America. El Salvador has continued to buy one Bitcoin daily. Their economy has turned around. Their crime rate has plummeted. The president there has really done a phenomenal job. And then everybody's favorite libertarian story, Javier Milei from Argentina, that huge surprise win. He is such a big Bitcoiner that they have installed Bitcoin mining machines at the central bank in Argentina.
Wow.
And that is phenomenal, right? Argentina is legendary for abusing their currency. They have defaulted their peso. They've defaulted on the peso on average every 15 years. They just print and debase it, and then they default and start all over again. They've gone from that to Bitcoin miners in Buenos Aires,
Amazing.
in official government buildings. So it's really interesting to me. The thing that is the biggest threat to fiat currency is now the thing that more and more governments are starting to say, wait a minute, this is a benefit to us. It's a benefit to our citizens. So wishing nothing but the best for El Salvador, hoping Milei's turnaround continues in Argentina and that the peso becomes more stable. And for Americans, I really hope we get a more friendly environment toward Bitcoin, less abuse of the currency. And if that means Judy Shelton as chair of the Fed in a couple of years, then you're going to want to own gold and Bitcoin. We're huge fans.
Huge fans, as we have been for quite some time here at DKI, in gold, Bitcoin, and everything just discussed there. Moves us to thing number two, Gary. We're
Wait,
talking
Rob,
about,
before
yes,
we go to thing number two, I've got this up on my screen. Bitcoin just crossed 89,000.
did it. Okay, there you go.
We should be live streaming this.
Yeah, I know. That's the next evolution of our show,
I,
podcast, whatever we're calling it.
I'm gonna tell you, our excellent interns, Andrew and Alex, they messaged me earlier today saying, I think we've got one of our things for next week. I said, is it Bitcoin? They said, yeah. I said, great. So do a price chart for that, do one of those now, and then update it every 30 minutes for the next week, and we'll just go with the last one.
Yeah, exactly. That's what's necessary.
Sorry to
Um,
interrupt you, but
No, all
prices are
good,
moving
all
here.
good. Yeah, we were told everybody we'd be tracking that. Yeah, you're right. We should have been live streaming next time for sure.
All right.
Gary, thing number two, going to inflation. It's not subsiding. Fed cuts again. You said Powell glued to his seat. Thing number two, the Fed's tug of war, rate cuts, inflation jitters, and Powell's unshakable tenure. Thing number two, Gary.
Yeah. So the Federal Reserve had their November meeting, and they have these 2-day meetings, and at the end of the meeting they come out and they, it's like when they elect a new pope, right? There's the black smoke, the white smoke, so they do this, and then we find out if we're getting rate hikes or rate decreases. Last week, the Federal Open Market Committee, that's the Federal Reserve, came out and, as expected, reduced the Fed funds rate by 25 basis points. That's 0.25%. So they lowered the Fed funds rate by a quarter point. So now the reference rate is 4.5% to 4.75%, depending on whether you're buying or selling. But what's really interesting about this is they don't have inflation under control, and we're going to get more CPI data this week. But the core CPI has not come down. We talked a week ago. The core PPI has been stuck for 6 months. I also think those measures are understated. And for people who are coming in late, CPI is the consumer price index. That's the index that people usually refer to when they talk about inflation. PPI is the producer price index, and that is the favored inflation metric used by the Federal Reserve. So and I think Alex wrote this line about the Fed lowering rates. He wrote, maybe they're just hoping inflation will subside on its own. So, like, fingers crossed, like, let's hope this doesn't lead to disaster. Why not? But the press conference did have a funny moment. I got to give Jerome Powell credit. The guy is unintentionally hilarious in his press conferences. He's just so serious about everything. There have been rumors that President Trump would ask Chairman Powell to step down or try to force him. I'm not a lawyer. I'm not aware of any legal method President Trump could use to force Chairman Powell to step down. I also don't know that that's what President Trump wants to do. It's been a rumor. It's not clear what action he's going to take. But this, of course, led to questions in the press release. And one of the reporters, asked Chairman Powell, if he, meaning President Trump, asked you to leave, would you go? And Powell, who is notorious for giving fairly long answers, just said no. And that was it. No, I'm not going anywhere. And in other comments, he's made it clear he is glued to his seat. He's not leaving. Now, that I have no criticism for him on that. He was appointed and confirmed for a full 4-year term. There's no reason he should have to go. And it's not clear that President Trump is going to ask him to. But it was just a funny moment in the middle of all this. Best case scenario is Judy Shelton in 2 more years. But, in the meantime, Powell can lower rates with his fingers crossed that inflation will somehow go down all by itself.
Gary, you're saying that big part of the decision to cut rates is the desire to help the Treasury lower borrowing costs. You call that in the takeaway something that has failed miserably. Tell us why.
Well, and here's the thing, Rob. The Fed is not supposed to consider that policy, right? And so we've talked about this at length on this show, that the real culprit for inflation is Congress. They overspend, and with the help of the Treasury Department, they monetize that overspending. That's just a fancy finance way of saying that as Congress overspends, the Treasury Department sells bonds, indebting us even further, and then they create cash and it gets sent out into the market. And that's the thing that's causing inflation. And for the political people here, that spending is a bipartisan problem. Both parties overspend. It's a problem for everybody. And the Fed is not really supposed to consider that, but they kind of need to at this point. With $36 trillion of debt, there's a great fear that if the Fed were to raise interest rates to a level that would get inflation under control, the borrowing costs will crush us. And at this point, they really have. Borrowing costs at this point have soared past $1 trillion a year. They're right now in the neighborhood of $1.5 trillion a year. That's only going to go up. And so we think a large reason that the Fed has been cutting a total of 75 basis points, or 0.75% over the last two meetings, is because they're trying to help the Treasury lower borrowing costs, and that has failed. So I've got the chart up here. By the way, I'm looking at USTreasuryYieldCurve.com. It is a great site for people who are interested in this kind of stuff. You have two options. One is you can go there and just look at the data yourself, or keep watching DKI. We'll tell you what's going on. This method is easier, but if you want the data, these guys have it. The 10-year, when the 10-year Treasury, when the Fed lowered rates, was at 3.6%. And as of today, it is up to 4.3%. So that's a 70 basis point increase. So the question here, and we've addressed this on the show before, if the Fed is lowering the Fed funds rate, shouldn't that make the rest of the yield curve come down too? Aren't they lowering borrowing rates? How is it the Fed is lowering the Fed funds rate, but the cost of borrowing is going up? And the answer is because the people in the bond market are not stupid. They're smart investors, and they understand that a lower Fed funds rate means more inflation, and more spending means more inflation. And so they're looking at this and saying, oh, well, they're lowering the rate now. We're going to have more inflation in the future. And they're applying a higher discount rate to future bond payments. When you do that, you say, okay, well, if I'm applying a higher discount rate, those future bond payments are worth less. Therefore, I will pay less for the bond. And the simple bond math is, if you're paying less for a bond, the yield or the rate on it increases. That's the way these things work. And so as the Fed is lowering rates to get this under control, they're getting the opposite effect. But I think that's why they've lowered. It's just not working so far.
That's thing number two. And this again is the President-elect Trump loves Bitcoin issue. If you're watching, again, grab a free subscription. That'll ensure that you get notified on all content going out through the DKI website. We'd also hope that you would consider a premium subscription. Be first on the alert for buy, sell action from Gary, current recommendation chart, and a lot of other premium access. Gary, thing number three, we're moving into Talen Energy. We talked about this a couple times on the show over the past 6-7 months, I'd say. They received an unfavorable regulatory ruling. You spoke with Enrique Abeyta about this. And what happened next was very interesting. Thing number three, Gary, Enrique Abeyta unpacks the misleading Talen Energy headlines.
All right. So we're going to explain this. For people who are really interested in more, we have an almost hour-long video up from last week, me talking with Enrique about Talen Energy. We actually have done 2 webinars with Enrique this year. They're both on the Deep Knowledge Investing YouTube channel. Check them out. Enrique is fantastic on this. He brought the idea to us in May. I want to say the stock was something like 207, 208. And I'm taking a look right now. It closed today, last trade. Sorry, I gave you the wrong number.
I was going to say
107 or
that's where we're
108.
trading
Yeah.
at today. Yeah.
Right. It's at 209 now. So almost a 100% return since May. And what happened then was the stock ran up, and a week ago on Friday, we got an adverse ruling from the FERC. That's the Federal Energy Regulatory Commission. And they rejected a deal allowing Amazon to expand its data center power capacity by 180 megawatts. Now, that's a lot for a data center, but in terms of that part of the power grid, it is a meaningless number. It's like 1/10 of 1%. And the FERC was looking at this and basically saying, okay, it's not that this deal is the problem. It's what do we do with the next 30 deals that are like this? And so they rejected it, and there was a misperception in the market. The market incorrectly, and this is the thing Enrique explained, and he did a great job explaining this both on the webinar and in writing. But what he explained was people thought that the deal where Amazon bought this data center from Talen Energy, along with the agreement to buy power from Talen Energy, had been rejected. And all of a sudden, they were revising their view of Talen's EBITDA, their cash flow, their earnings. It looked awful, but everybody got it wrong. Now, the stock got hammered. It was down something like 10, 12%. And on the back of talking with Enrique over the weekend, last Monday in the pre-market, I was buying stock at 152.80. Deep Knowledge Investing subscribers were able to take advantage as we were buying that stock 152, 153. So we've made, I think, 36%
Yeah.
in a week on this, which is amazing. And basically what Enrique did was explain two key things. One is that the deal wasn't rejected, it was closed. The thing that was rejected was for Talen Energy to be providing power and not having Amazon pay transmission costs on just the extra 180 megawatts. This is a meaningless amount of money for Amazon. The key thing is the deal wasn't rejected. And Enrique thinks, and I agree with him, the most likely result here is they just restructure the deal so that the Talen will supply Amazon the extra 180 megawatts, and Amazon will contribute the appropriate amount of money for transmission costs to support the infrastructure in there. And that's the most likely outcome. But in the meantime, this stock is up almost 100% since Enrique brought it to us, and Deep Knowledge Investing subscribers, we were able to make 36% in the last week on this. And by the way, Enrique thinks that this just on its own, is easily a $280 stock, or that they could potentially be bought out for $300 or more. He goes to the math on that in the webinar. I'm not going to take everybody's time with that here, but if you want more detail, it's all available.
Yeah, be sure to check that out. That's up on the webinar. Gary, what does this mean for DKI's thesis on uranium? As I know, that's a position that you're very favorable on.
Yeah. So one, power demand, the demand for energy globally is going to do nothing but increase. Two, here in the US, there's this idea that we're going to electrify everything. We're going to, have electric cars. But the thing that nobody's really thinking through is if you have an electric vehicle, it's roughly the equivalent of plugging in like 24 more refrigerators in your house. The grid doesn't have the ability to power that. And three, everybody's very excited about AI, but we are very close to the point where one individual artificial intelligence data center will use as much power as an entire city. So how are we going to do that? You can't run these things with windmills and solar. Those are intermittent. These data centers need to be up 99.999% of the time. And politically, it's just not viable to build that much energy generation infrastructure based on carbon fuels. That leaves nuclear. And so, huge amount of demand for nuclear, huge amount of growth there. The fuel for that is uranium. And so, yeah, we own Talen Energy, but where I have a huge position is in uranium, because all of these plants are going to need something. There was a report in the Wall Street Journal today, something we've talked about for weeks on this program, Rob, that there are 3 decommissioned nuclear plants, all in the Midwest, that are, if you want to count Pittsburgh, or, it's a 3 Mile Island, one in Michigan, and there's one more in the Midwest. I can't remember where the third one is, but they're recommissioning all of those and going to restart them. These things are all going to need fuel. So we're very, very bullish on uranium. If you want more information on that and a great way to make money, check out Deep Knowledge Investing. These are the kinds of ideas where we've had just huge returns for our investors. If you're not going to do that, that's fine. But if you're looking for another way to make money, check out Enrique Abeyta and HX Research, because the guy is really good.
Yeah.
So either way, come subscribe to us or to HX Research. You'll be well cared for.
Yeah, Enrique does some great stuff. Thanks for sharing that, Gary. Thing number four, talked about this a while ago as well. It seems like everything always circles back around the buy now, pay later usage increase that Americans have been running through. Thing number four, Gary, Affirm, the firm credit lending earnings reflect the stressed consumer. Gary, tell us more about what comes next.
Big credit to the interns. Andrew and Alex are the ones who caught this one. First, Rob, let's just talk about what buy now, pay later is. You buy something now, and then you pay it off with monthly payments. And if you pay on time, it doesn't really cost you much more. But if you're late on anything, then they start charging you a huge amount of interest. Does that remind you of anything? It is basically a credit card with a longer payment period. That's all it is. And we've talked about buy now, pay later before, where young people have spent money, they've bought things using buy now, pay later, and then later they've been shocked that they got bills. How did this happen? Why am I getting these bills? Somehow, if you don't have to pay with cash at the cash register, they thought it was free. I don't understand that thinking, but here we are. In the meantime, Affirm Holdings, which does a huge buy now, pay later business, their revenue of 698 million surpassed the projected 664 million and was up 41%. So basically, this was a great line from the interns, that these BNPL, buy now, pay later plans, function like credit cards, but with better marketing. That's such a great line. But this is what's happening. And we've tied that to the fact that Americans had a huge amount of pandemic savings that came from two things. One is nobody was able to go out. You weren't spending money. You weren't going to restaurants. You weren't going to concerts. You weren't going to shows. People weren't entertaining themselves, and so they saved money. Their cost of living went down when they weren't doing anything fun. And then the government sent out stimulus checks. Well, somehow almost $2.5 trillion of those savings have disappeared from 2021 through now, and people have burned through their pandemic savings, and buy now, pay later use is skyrocketing, and those things are definitely tied.
Gary, with that being said, you talk about a looming credit crisis, right? Is this kind of what you're talking about at the top of the show? That yes, some things at the top level might look like they're changing, but some things still remain the same, just in that we're still in this critical moment with crisis on the horizon just because of how deep the hole has been dug already.
I think there's a misperception on credit card debt. Earlier this year, people got very excited by the fact that credit card debt surpassed $1 trillion. It set an all-time high, and everyone said, oh no, we're all going to go bankrupt. But the thing that people were forgetting is that inflation matters here, that $1 trillion isn't as much as it was 5 years ago. I mean, it's a huge amount of money, but that's total US credit card debt. Um, and as things are more expensive, then their credit card debt has gone up. I don't know that that's such a big deal, but the thing that concerns me is that all-time high credit card debt does not include buy now, pay later. And that's a huge issue. And so, if you look at a firm's revenue growth, it's inversely correlated with savings, and it's driven by other credit. And our concern is that declining cash leads to higher use of credit. And guess what follows from that? It's going to be more defaults and bankruptcies. So where we're seeing credit usage at all-time highs, and that doesn't include buy now, pay later, and that's growing at a 40+% rate, at least it is at Affirm. All of that is going to lead to future defaults and future bankruptcies. And some of these companies are going to be taking gigantic credit losses that are not accounted for in their stock prices.
Great stuff. And that concludes the first portion of the five things, Gary. We're going to move into thing number five, investment, research, education, knowledge. Today, we're talking about risk, Gary. So for investors wanting to own stocks, but worried about the risk, we're going to talk how does changing exposure maybe eliminate risk and all the other things associated with risk that you need to know. Thing number five, Gary, some ways to hedge risk. Tell us a little bit more about hedging.
So, Rob, one of the things that always surprises me is professional investors spend a lot of time thinking about risk and how to hedge risk. And there are lots of ways to hedge. We'll talk about a bunch of them today, but it basically means either reducing your exposure or changing your exposure or isolating some sort of exposure so that you're only taking the bet that you want to take or buying insurance against things. And the amazing thing is, amateur investors, individual investors, rarely look at it, rarely think about it. Registered investment advisors, the RIAs, the wealth managers, unless you're ultra wealthy and have someone who's really good at it, you're probably not getting covered in this way. And they all act like, shorting something is somehow like this crazy dangerous thing to do, but being 100% long all the time every day, that has its own risks. And so, we're going to talk now about some of the kinds of things that professional investors do to change their exposure or limit their exposure. These are the kinds of things that are available to you as an individual investor. And if you want to start thinking about these things, great. And if you want help with it, this is the stuff that we do really well.
Gary, there are multiple strategies that are out there. One tool that you talk about first is a put option. Gary, what's a put option? Tell us how that can be utilized.
Well, so it is a put option gives you the right, but not the requirement to sell a stock at a particular price. So, for example, we were just talking about Talen Energy and, how we have such huge returns in that. And thanks, Enrique, for that. So the stock closed today at 209. And let's just imagine for a minute that I'm saying, I really love owning this position, but I have a lot of profits in it and I don't want to sell it and I don't want to pay the tax bill. And I think there's more upside, but it's run up a lot recently. It could go down. So what you might do is you might buy a 200 strike put option, 3 months out from now. And what that would do is say at any time over the next 3 months, I have the right, but not the requirement to sell Talen Energy stock to whoever uh, uh, sold me that put option for $200. And in the hypothetical example, if Talen were to drop below $200, like 190, 180, something like that, we could force the person who bought the option, sold us the option, to take that price. We'd say, we're selling it to you and we don't care that the market price is 180. We're selling it to you at 200. And that's what the contract does. So that gives you the ability to protect your position and say, okay, if it goes down, we'll take some losses, but if it drops below a certain point, we're covered, right? We've hedged out that risk.
Gary, insurance on these types of premiums, you're paying for that. Explain how insurance gets worked into this equation here.
All right. So the example that we just gave, we were saying, okay, what if you bought Talen Energy puts, the $200 puts? Those aren't free. Nobody's writing the risk. Nobody's taking the risk that they'll have to buy that stock 10 or 20 or $30 below the strike price. The strike price in this case is that $200 number. They're not taking that risk for free. You have to pay for it. So it's like anything else, Rob. You have a house, you buy home insurance. If your house burns down, you have the insurance to reimburse you. If it doesn't, that insurance costs you something. And it's the same thing in this situation. So imagine that, we were to buy those 200 strike Talen puts. And, the stock, instead of going down to 180, what if it goes up to 280, which is where Enrique thinks it could run in the next few months. Um, in that situation, we do really well in the stock, but we would lose the premium or the price that we paid for those put options or that insurance. The options would expire worthless. So, you need to think about how much are you willing to pay to protect your downside, and it's okay to pay for it and it's okay to lose money on it, but just don't think that it's free. You can't be covered for up and down and sideways and not have to pay something for it.
Gary, you also talk about asset exposure. Tell us how asset exposure could be another way for you to hedge risk within your portfolio.
So, Rob, when people talk about diversifying their portfolio, they typically will talk about it in terms of, well, you should own a certain number of stocks. Now, some people say, a dozen stocks is enough or 2 dozen stocks is enough. Other people have portfolios where they'll have 200 or 300 stocks. Um, and so, one way you can control your exposure is to own more stocks so you're not as exposed to the possibility that one of them will blow up, right? You don't want to have a single asset portfolio. But another way that you could do this is diversify across various industries. So, for instance, I own a lot of energy positions, but I also own some some micro cap, ultra high growth positions. Those stocks aren't going to move together. And so we're diversifying. I like owning medical stocks. We've owned technology. We've owned insurance and healthcare service providers. So when you own different kinds of assets, that way you're not as exposed to one thing happening. One bad event doesn't change everything for you. You can also diversify across asset classes, right? I focus a lot on equities, but you could buy bonds. I wouldn't recommend it right now, but you could. Things like Bitcoin, gold. So there are lots of different options, and you want to take advantage of at least some of them.
Shorting, Gary, pops up a lot when you talk about diversifying a portfolio. Tell us more what that means, shorting in regards to stocks, industry, even market indexes. Gary, what is shorting an individual stock or position like those mentioned?
So, Rob, shorting is misunderstood. People often refer to it as being wrong or immoral, that there's something, crazy about it. People refer to it as risky and dangerous, as if being 100% long every day isn't. I view it as a tool to reduce risk. Now, for people who don't know, shorting a stock is simply the same thing you do when you buy a stock, except in reverse. So if we think about just buying a normal stock, right? So Rob, you would buy a stock and you hope that it goes up and you sell later at a profit, buy low, sell high. You've made a profit. Congratulations, you've done really well. When you short a stock, you do the same thing, but in reverse. What you do is you borrow the stock and you sell it. You sell the stock that you don't own and you get cash. And then, hopefully, in this hypothetical example, the stock will go down. And when it does, you can take that cash, repurchase the stock at a lower price, return the stock to the person who lent it to you, making them whole. They lent you 100 shares of Talen. You return to them 100 shares of Talen, but you end up with more cash because you sold high and then bought low, right? So when you go long a stock, you want to buy low, sell high. Shorting, you want to sell high, buy low. That's all it is. And these are tools that we use to reduce our market exposure. It's something that I use a lot to isolate my stock picking ability. I may buy a bunch of stocks I like and short the market against it. And in doing so, I'm creating pure alpha, which is just a fancy way of saying I'm isolating the effect of the market on my positions, on my portfolio, and just saying I'm going to live with the outperformance of my stock picks over what the market does. And that's a pretty good way to do things because I'm not taking market risk, I'm taking skill risk, and that's a bet that I'm willing to take.
Interesting. Gary, at DKI, you use a lot of different hedging strategies. One of them positions in uncorrelated assets. Gary, tell us two of your favorite positions for reducing risk.
So, Rob, when people talk about uncorrelated assets, they often will talk about privates. That's not really viable for most investors unless you have a lot of money. They'll talk a lot about real estate, which is tends to be uncorrelated, not always. Again, those tend to be private, but for me, my favorite uncorrelated assets are gold and Bitcoin, not in that order. Um, those are positions that will benefit from a decline in the purchasing power of the dollar, something we talk about pretty much every week on this show. And that will continue. And it would have continued regardless of who won last Tuesday's election, whether it was Team Red or Team Blue. The dollar is going to be continue to be debased, which is just a fancy way of saying losing purchasing power. And so we have these non-financial assets, things like gold and Bitcoin, that don't have a return and they don't have fundamentals. But what they will do is allow you to put some assets in things that are not correlated to the market, but which will benefit from a decrease in the purchasing power of the dollar. And so I'm a big fan of both. Um, my Bitcoin position is much larger because that has just run up an enormous amount where I have good profits in gold. We have insane profits in Bitcoin.
Great stuff, Gary. Covered a lot of ground there in thing number 5. If you've got any questions you want us to cover on the show, please leave it in the comments. Send email into ir@deepknowledgeinvesting.com. We'll be sure to check those out and consider some of those questions for our 5th thing as we continue to pump out new editions of the 5 things. Gary, this wraps up this week's version. The President-elect Trump loves Bitcoin issue. Great discussion. Saw Bitcoin hit 90K on the show. Lots of good conversation, exciting things happening. We're going to keep you in tune with the good, the bad, and all the indifferent in between. Gary, closing thoughts from you.
Yeah, remember everyone, whether you're elated by last Tuesday's results or dismayed by them or apoplectic, whether you think the market's good or bad, there are always ways to make money. It's our job to figure that out. Tonight's show, we talked a lot about a variety of pretty complicated things, especially in that last section. These are the kinds of things that we help individual investors with. At our core, look, when we do this show every week, we're really focused on investor education. And what we want is for you to understand the stock markets, the economy, finance better. And if that's all you get out of this, terrific. I would love to live in a country where more people understand what's happening in the financial world and the markets. And we're so happy to help you with that. But the real core of what deep knowledge investing does is to help people make more money. It's the stock picks, it's the uncorrelated assets. We were buying gold and Bitcoin years ago. Our energy positions, we were buying uranium years ago. These things have all gone up multiples. So, if you feel like that's help you're interested in, these are the things that we do on a daily basis to not only explain these things to our community, but to help people make money from it and help people make money from situations that may not always be pleasant or attractive or what we want them to be. So feel free to reach out, ir@deepknowledgeinvesting.com. Feel free to subscribe. If you're not sure, avail yourself of the free subscription and check it out for a month or two. And then, see if you want to join us to make money with us. That's really what we're doing with the premium subscription. So we'd be happy to have you and help you. In the meantime, if all you do is spend your time with us here, we know it's valuable. Want to thank you for your time. And we'll look forward to seeing you next week. I can tell you it's only Tuesday, but Andrew and Alex already have some pretty hilarious things coming up. And we are going to be poking, I think, next week at one of Bitcoin's biggest critics. So stay tuned to see who we're taking aim at next week.